As softer US inflation data raised hopes that the Fed could slow down its aggressive monetary tightening cycle, investors are hoping for a catch-up rally in global equity markets. Analysts believe the recent correction in crude oil prices too could bring respite to the markets and compensate for the losses for the remainder of the year. So far in November 2022, the Dow Jones Industrial Average, the Nasdaq and the S&P 500 indices in the US have rallied up to 3%. Besides, FTSE 100, CAC 40, DAX in Europe, Taiwan TAIEX Index, Kospi Hang Seng and Shanghai Composite in Asia have rallied up to 21% during the same period. In comparison, the domestic benchmark indices have mostly remained flat so far this month. According to Christopher Wood of Jefferies, the positive geopolitical developments in the Russia-Ukraine war could act as a powerful catalyst to instill strength in the European markets. He says that the Russian retreat from Kherson and the related move to the eastern side of the Dnipro River could also be seen as a potential prelude to some deal. Any such deal would be a major positive for the peaking out of inflation trade, with European financial stocks most geared to the upside. US equities too could recover further from the current levels given the recent underperformance and the potential cool-off of gas prices. Amid this, Indian equities may see profit booking after the recent surge, with pockets like FMCG, autos and cement holding the fort in the near term.
A market may see some kind of a sideways movement, probably because the overvaluation, that P premium that we are talking about, because China, if it starts to open up, or we see some kind of trade happening away from India to other markets which are already beaten down, then probably India may underperform. But we don't see a dramatic fall in Indian equities. Probably 1,200 points fall is possible. But we think that before the budget, we might see some kind of up move in the markets in the near term. There are two reasons to it. One is that the fiscal position is better for India, so that the expectations of the budget will be a little bit more towards consumption side, which is little weak. So the domestic focus names such as cements or probably FMCG or autos, which are linked to consumption, probably that may pull up the index further in the next 3-4 months.
Today, investors will closely track minutes of the FOMC meeting and macro numbers across global economies. Besides, foreign flows, crude oil prices, rupee movement, and other global cues will continue to dominate domestic equities on Wednesday.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.